All right, everyone, the red light is on and we are recording. This is Mark and Kyle back for another week of the Weekly SITREP. Today is April the 4th. It is Easter Sunday, and we are going to be dropping some knowledge on you all today, talking about what's going on in this past week. So for those of you who might be new to the show, so this is how it works. So Kyle and I get together every week and we talk about the big news and events from the world of business and politics, all in an effort if you are someone who's thinking about getting out of the military to kind of make you feel more comfortable about the civilian operating environment, which you're heading into after the military. You can use this information for interview, school interview, job interview, whatever it is, or try to figure out what type of job you want to go after, industry, or whatever it may be. Or maybe you just like listening to this. I know I've had a number of friends who've reached out to me, told me, they're out of the military, they still like listening to the show. So we appreciate all that. So we start off every episode. We start off every episode talking about news from the defense and security space, just because we know we're all vets here and we still kind of know what's going on in that world. So the first story that we have is kind of a bit of a scary one. I'm not gonna lie to you. So it's about Russian mobilization on the Ukrainian border. And so for the last couple of days, Russia has been moving a whole bunch of troops, equipment, tanks, armor, everything towards the Ukrainian border. And this is all kind of centered around the fact that there's a current ceasefire between Ukraine and Russia right now, but that is coming to a close, I think, in the next couple of days. I don't have the exact date in front of me. And everyone right now is worried that, with all these forces massing on the border, that when that ceasefire ends, Russia is going to take things to the next level. So everyone's kind of scrambling right now, trying to reach out to people in the Russian government to figure out what their play is and what's going to happen, because this is a little bit unexpected and a bit intimidating for everyone who has kind of had Ukraine on the back burner for a while, and now Russia is stockpiling, men, women, and equipment there on the border. A little scary at the moment.
Yeah, it's been crazy to see this, right? And I think I've viewed it in two ways. The first is that Vladimir Putin has some serious issues at home right now. He's got the Navalny guy who's currently going on a hunger strike, and it's already lost something like 20 pounds in prison, and is saying like, hey, I'm basically being tortured here, et cetera, which seems pretty on brand if you're Vladimir Putin. And so this,
I'm sure he gives zero shits about that.
Well, I think he does care about it, right? Because he's trying to find a way to distract from it. Is the way I kind of took this. They when this guy got arrested, I mean, it was like all over the media, right? There were protests in Russia, right? And so this is a way for Putin to distract from it, and it's also a way to test the Biden administration. You see this fairly frequently when a new administration comes in. There'll be some sort of like mini crisis that a foreign government will basically do to basically kind of, hey, what are they going to do, right? Because they're untested, right? So not good, but also I think it's almost something that like we would have like a SAMS graduate come up with if they were like at a division level. They're like, hey, what if we take these tanks and we and purposely parade them through town so people can take pictures, right? And they can see they're like heading east, right, to the Russian border. This would be the sort of way I would take it. I think all the prostinations about World War III are a little overblown.
Yeah, tend to agree with you on that. I think you have a great point. I mean, Putin has shown time and time again he is a very, very adept at understanding how the world views him and where he needs to care and not care. And this definitely, now that you say it, definitely seems like a distraction on his part of, I'm just gonna shake my right hand over here. That way you'll ignore what I'm doing with my left hand with this potential contender for my power, starving himself in prison right now. All right, we're going to move on to the next story. Unfortunately, there's not a whole lot of details on this one, so we're going to have to wait and see, and we'll give you all updates next week. All right, so the next story we're going to talk about is, we've talked about batteries a number of times on this show, mostly, when it concerns electric vehicles. I think we probably talked about them in some type of defense capacity in the past as well. And so this article that we're looking at today is about, the importance of battery power to the strategic defense of the United States, and how a huge part of that is in danger because a massive portion of the battery supply chain, everything from mining it, to processing it, to putting it into electronics is in China. Okay. And so when we talk about the depth of things out there that, run on batteries, um, it's all part of like a broader Pentagon strategy. Okay. So if we think back to like early days Iraq war, and one of the most dangerous jobs was an 88 Mike truck driver. Okay. Because they're just constantly driving trucks back and forth filled with fuel, because we have Humvees and all kinds of things that just need fuel constantly. And like it just becomes a big fat target. And so we know that, the American military's demand for fuel puts us at risk because we have to move that fuel, and those become big fat targets. And so leaders are thinking, okay, how can we possibly have some type of, more, some type of battery power that isn't as reliant on, these, isn't as demanding on our logistics train, and gives us the power demands that we also need. And it
Yeah,
kind of
it's
couples into, it couples
no,
into
go
some
ahead.
like some satellite things and all kinds of additional technologies that are in the processing right now. But there's a weak spot in the armor in that a lot of that stuff is being developed or is like run somewhere in China. Sorry, Kyle, what were you going to say?
Yeah, it's also the logistics part is a huge portion of it, right? There's having supply trains that go way far back, something you're always vulnerable to, and like a great point that you made. It's also a distributed operations concern as well, right? If you were going to try and like fight China in the South, China Sea, China's kind of built this strategy up where they have hypersonic missiles and they want to be able to attack aircraft carrier battle groups, etc. The Marine Corps has kind of come up with this strategy that they would have basically Marines everywhere, like all in these little islands. And in order to basically make it so they can be more self-sufficient, they'll need, power, right?
Right.
And so if you have advanced batteries that you can then have some way to recharge, now you've got some Marines embedded on the island. That drastically reduces the supply chain. And they're able to operate more independently, and basically it would force China to it would be a good defense against some sort of like large weapon that they'd want to use against, say, like an aircraft carrier
Right.
battle group. The other thing that they have, and I've seen this from some of the work I've done on my professional side, is the if you have a vehicle that relies on petrol, right, and you've got to fire up the vehicle like a tank or something, and hey, we've got the tank's running off has some battery capacity, right, but you can drain the battery capacity really quickly. And so if the tank is just in like a watch mode or has like sensors that are just basically receive mode, not emitting like any signals, hey, now we have to fire up the tank to recharge the batteries, and basically go back to that, and it creates a huge IR signature, as
Right.
well as noise and everything. And so the idea here is that if you had super advanced batteries, you could have military equipment that's basically in sentry mode all the time. Not to mention that, it's very easy to turn on. You can move very quickly, right? Just looking at from like electric cars, right? They have all sorts of capabilities that you wouldn't see in a traditional car. They have you get instant current for heating, for cooling, for all their different systems, right? So really a force multiplier, and something that the U.S. Is investing more time and resources in. They would love to have advanced batteries in all their vehicles. So it'll be interesting to see exactly how they go about doing that, because it's a really tough problem. Like
Yeah.
batteries, I mean, the commercial sector is attacking this from every different angle, and the U.S. government has kind of fallen behind in innovation. Where they used to lead the world in innovation. Now we're really far behind, or they are really far behind the private sector. So I for one will be interested to see how this technology gets incorporated into future iterations of military equipment.
Yeah. I think to kind of, I'm remembering this article or something I remember seeing a couple of years ago where the DoD was looking at making essentially like really small nuclear reactors
Yeah.
to power fobs, right? And that's just to like, I just say that to show that like that's the level that like we're trying to think about, because like power is such a problem when you have so many people living on a base together, and you have so many things you need to power, from information systems to vehicles to life-saving equipment, and everything needs power. And it's a huge drain right now. Pretty much everything we do is reliant on fuel power generators or something. And so they were willing to take like, or, at least thinking about putting like a mini nuclear reactor in CAF or something to power that base. Like that was like being tossed around as a serious idea. As far as I know, maybe
Yeah.
still is. I don't even know.
Yeah, it's wild, right? I remember flying back into Bagram, and you could see where they had these massive turbine generators, and these things were, essentially jet engines, right? And they would
Yeah.
just pour, they would just run all the time, super reliable, to just generate all the electricity you would need. And there also is a concern too that, hey, there's going to be a need for laser weapons here in the future. That technology is maturing rapidly, and that requires obviously just immense amounts of power. So
Right. Right.
there's so many different needs for this. So if you're looking to, battery space, good place to be in.
Yeah. Lasers. Real
That's
cool
right.
stuff. All right. The next story we're talking about. So Microsoft this past week inked a deal with Department of Defense for, I think it's about 22 billion, and they are going to deliver. Just get the final number here. About 120,000 units of the Microsoft HoloLens. So this is an augmented reality device, and I think I was trying to figure out if this is going to. I'm assuming this is going to be predominantly for training purposes, but my guess also is that some level of this is some type of development as well to figure out like how do we bring augmented reality into the battlefield. So thinking like a super soldier walking down the street and getting all kinds of information and cool guy stuff. But my inclination is right now it's probably gonna be entirely or mostly a training device of some type.
You
But
would, yeah,
nonetheless, huge deal.
yeah. I mean, you would think, right? I just did the math here. 22 billion divided by 120,000 is a per unit cost of $183,000 per unit, which makes that way more expensive than what is probably the most expensive headset you can get right now in the U.S. military, which is what the uh, the the helmet and visor for the
Right. Right.
F-35, which is like
Yeah.
$90,000 or something
I
like
mean, I'm
that.
sure some level of that is like
Yeah,
contracting
yeah,
on
yeah.
training and software and everything too
Oh,
wrapped up in there.
yeah, yeah.
Yeah.
I mean, it's a package deal, right? But if we were just gonna just
Still.
do the basic number, for people who don't maybe fully understand what augmented reality is, I think this is a good example. On my iPhone now, say if I want to go to Allbirds website, right? And I say, hey, I want to try out a pair of Allbirds, but I'm not anywhere near an Allbirds store, or they're closed down because of COVID. I can, aim my phone at my feet, right? And the Allbirds app will superimpose a pair of selected sneakers on my feet, and I can see, how well they look. Right, I actually bought my last pair of Allbirds this way, and they looked pretty good. I wasn't sure if the color was going to work out, but it did. So, sorry, got
Got the doggo coming in here.
the dog decided to go bark at the neighbor here. They so when you think of that, that's kind of what augmented reality is. It's like, hey, you're still like looking at stuff, right?
Right.
But you're able to kind of have some additions to it to maybe, to enhance your situational awareness, to provide some sort of aid, right? Maybe like Master Chief's helmet from the Halo games.
Yeah.
I think I was reading all these comments when this came out on the internet, on like meme pages and stuff and Facebook, and people were like, "Gonna be locked up in the army. We're never gonna get to use it. We're gonna break
Yeah.
it.
Yeah.
It's stupid. It's gonna be 10 years too late." Like, I don't know. Maybe all the kind of like AR and VR stuff that I saw when I was in, which is now ancient times, I was kind of like, really, why are we doing this? This kind of seems like not worth it, but it's gotten remarkably better,
Yeah.
to the point that it's more feasible, right? And this is based off of Microsoft's HoloLens 2, which I've used one of these, and it's pretty actually amazing, right? So yeah, it'll be interesting to see exactly how this is used. If this is just one step forward towards the some sort of Halo universe convergence project,
Right.
where everything, you got like some AI and your head pointing stuff out to you in your AR helmet, or if this will just be a huge boondoggle and we'll just flush 22 billion down the toilet. I don't know.
Yeah. 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 I'm remembering. So like when I was a brand new lieutenant, I was involved in this. My battalion got selected for this study, and so they picked one group from our battalion and another group from our battalion, and we were all the entire point of the study was to figure out we put some hard data in the efficacy of training with live rounds versus training with augmented reality. Okay, when it comes to marksmanship. So essentially, what they did was they put both groups through like a control exercise of it was basically like a basic qualification course and some other shooting stuff. And then my group went and we got like 3 days of hands-on training with a bunch of former tier one guys on marksmanship. And then the other group went and worked with the augmented reality system that the Army was testing out at that time. And it was all an effort to figure out like, okay, we can all probably recognize that shooting live rounds is better, but is using augmented reality like a 90% solution that will be good enough for those days you can't get to the range or you don't have the money to buy rounds or whatever it is, or it's just like another way to provide training resources to people who are looking to improve their core competencies.
Yeah, it's it'll be cool to see, because that is a big problem for the military, right? Is there's only so many training ranges. It
Right.
requires all sorts of forecasting requests, right? And like long range planning that unfortunately it just gets interrupted. I know you've been there.
Right.
So it'll be interesting to see how this will work. What is it? This article does say the company said the headsets will run on Microsoft software and help keep soldiers safe. There is something else. There was something else that made it seem like this was going to be used for something other than training. That you could take it out into the field, and it was going to provide stuff other than situational awareness or other than training purposes, right? So, yeah, it'll be cool to see. I hope I hope they get it right.
I can't imagine all the BII and everything that comes to one of these.
Yeah, that was my
lay all that out.
That was my first thought, is if I was issued this equipment, I'd be like, man. Oh my gosh, how I had like.
All right, Private Snuffy, come sign for your $200,000 headset right now.
Yeah, you can't even keep all the BII for a Humvee, much less your
right.
Your HoloLens set.
Yeah.
Like where's the flux capacitor?
Yeah.
If you ever watch Back to the Future. So.
All right, y'all. That wraps up the defense portion of the show. We're gonna head into the Civvy SITREP now. So this is where we talk about business news from the past week in the civilian world. All right. So the first story that we're looking at right now is titled "High Frequency Traders Eye Satellites for Ultimate Speed Boost."
Yeah, I read this article and was just.
This sounds like some crazy future shit right now.
Yeah, this was some crazy future shit, and I was just enamored by it, right? So if you know me personally, you know that there are some things that I have an affinity for that are future tech, and there are some things that I think are kind of dumb, right?
Okay.
I don't like Bitcoin for a variety of reasons as an investment, and everybody's got their own opinion on it, and I 100% respect that, right? I think crypto, is here to stay as a new way of doing finance. I'm just not convinced it's Bitcoin. When I read something like this, though, this gets my spidey senses tingling for a very big reason, and it's actually interesting because so when I moved to Texas here, which is the long-awaited move that I've been talking about for what seems like an eternity now, we decided to get Starlink in our house, right? One of my buddies is getting it, and so if you're not familiar with Starlink, right, and I promise this will tie into the article, is Starlink is a company, or it's a product that's under SpaceX's, which is an Elon Musk company that they are developing and are going to launch as a commercial service here shortly. So SpaceX is doing a lot of stuff for the government, right? So it's kind of like a public-private partnership, and they're also, every time they shoot up one of these rockets, right? Like they're deploying like, I don't know, like 10 to 30 of these little satellites, right?
Yeah.
And the way Starlink works is these satellites, they're different than traditional telecommunications satellites, right? Like I remember, if you've been deployed or if you had like satellite internet, right? It normally sucks. It takes forever. It's really expensive. This is supposed to change all that. And it's supposed to change it because you're going to have like hundreds and hundreds and hundreds of these little satellites that sit something like 100 times closer to the Earth than a traditional telecommunications satellite. And the idea is that they're so much closer and there's so many more of them that it doesn't matter like about weather. It doesn't matter about location, right? Like you have access to ultra high speed, fast internet. You could be out in the middle of the Sahara and have like, 500 megabyte internet, which is a game changer, right? It'll totally change everything. It's going to be just like, as big of a deal as 5G. And so this is so this article is talking about an application of that, right? And I think it's a way to maybe understand when you look at future tech where these applications could be. So, high frequency trading right now relies on all sorts of like any advantage to get a millisecond, right? To shave off time so you can execute orders faster. And so the idea is that so Starlink is going to be something that's for everybody, right? You can just get super high speed internet, satellite internet. But what this article says is what the kind of like next iteration of this, or the evolution of it, is people are going to be launching like private satellite networks that incorporate a variety of tricks to basically like say like, hey, you've got like New York and London, and they're going to have like a satellite system that exclusively serves that and does all sorts of crazy stuff that like uses like the atmosphere to like bounce off transmissions, and make it so you can for like a very specific application, like execute trades like really really quickly, between two finance hubs. And people are raising money off this, right? And they're going to do it. And that's, I mean, it's remarkable, right? Like this is the future. This is the sort of stuff that's going to be there. And so was it? So yeah, so you'd have like Chicago or London. So what is the workflow here? So a radio antenna in Chicago sends data up to a satellite. The satellite receives the data and relays it via laser to another satellite, which then transmits it towards London. And the data arrives in London. It is not yet known how long those take, but one satellite operator has touted speeds of less than 29 milliseconds. That's pretty fast, right?
Yeah.
Because right now you have to use undersea cables, right? And it's got to go through all this huge infrastructure, right? But if you can kind of like simplify it down, just have these special purpose, you could have communications, and companies will go all over this, right? So there's a lot of commercial potential and application.
I listened to something, the one other podcast I'll recommend to everyone besides, this show, obviously, is one of my all-time faves it's called Stuff You Should Know. And it's just these two guys, and they pick random topics and kind of dig into them. And this week I was listening to this episode about space junk. Okay.
Yeah.
And if nothing else, look that up at some point. We maybe should like talk about that at some point.
Yeah.
But it's just crazy. Like we're just sending so much crap up into space, and like that shit breaks apart. Then there's like, this screw that's traveling around like 200,000 miles an hour and stuff. But yeah, I'm totally with you, man. Like the incentive and the means are there for this to happen. Thus, people are going to do it because the incentive and means are there for it to happen, for sure.
Yeah, because we've now made it where commercial space flight, right? Like 30 years ago, right, you could only do it through NASA. Now there are commercial operators, and in fact, you can even go bid to have something set up, right? You can go find a broker, and a broker will basically say like, hey, you want to get into orbit, like let me kind of like see, like all the let me like get all the variables lined up, and I know the players, and let's see what price we can get you. That exists. And when I was going to my MBA program, they just started a space club, right? If you go to an MBA program, there's all sorts of like professional clubs that you have to join in order to access job opportunities. It's total pay to play, but I'd rather just pay in order to have access.
That's how it goes.
And these people are doing all sorts of cool stuff. They're going to like California, right? And it's just like it's a huge burgeoning industry. And I think I got actually something a little bit hard data here. So the so right now, if you want to transmit something, between like here and London, you got to use fiber optic cables laid under the Atlantic or Pacific Oceans. They travel about 2/3 the speed of light, making them slower than signals sent through the air or space. Alternatively, you could also use shortwave radio, which is fine. It's faster than fiber, but less reliable. And, if you've ever taken a class that involved understanding how radio waves work, you take information, right? And then you basically encode it onto a carrier wave, which then gets shot out over long distances. And then you have to you get the carrier wave, and then you like strip off the carrier wave using electronics, and then you're able to retrieve the information. It's incredibly fascinating and brilliant how it works, but that takes time, right? So if you just like use lasers and compute, like this is so much faster. And the numbers that I'm seeing, it said, hey, it'd be 20% faster than subsea fiber. And unlike Starlink, which plans to launch tens of thousands of satellites, this specialized satellite network that would transmit between, like, say, Chicago or London or New York and London,
right,
will have just 111 satellites, which still seems like a lot. But
yeah,
But
That's a
like this
lot
kind
of
of like,
yeah, it's a lot of satellites.
but still, it's like this kind of like band of satellites that are connecting,
Right.
and they're just like, shooting like lasers back forth between each other. Yeah, and it's to be optimized to deliver data from New York to London, or from Chicago to Tokyo, and several other routes important to traders. So it's almost like, instead of, like back in the day in like the 1700s, where you had like ships going across, but now we have like satellites, like, because
Yeah.
information is so valuable now. So
Yeah.
it's wild, man.
And I
Absolutely
think it's
wild.
important to like get back to why this is so valuable. So like, I mean, the baseline model of high frequency trading is being able to execute trades super
Mm.
duper fast based on, like algorithms you have that are predicting, okay, like the stock's going to go up 2%, great, like we're going to sell it super quick and then buy it back, whatever their strategy is.
Yeah.
But it's all based on being able to execute trades super fast and capture, like using like large amounts of capital to capture like these, relatively kind of smaller portions of gains, but just doing that a ton and ton and ton and ton of times a day. Okay.
Yeah, one reason why order flow, right? When you hear about like an app like Robinhood, they sell their order flow, right? Because high frequency traders take advantage of it, because it gives them, because when you think about high frequency trading, right, you're not trading on the fundamentals of the stock. Like,
Right.
oh, I think, they have a growth rate of this and yada yada yada. And, I think the present value, like, no, they don't do that shit. They trade on momentum.
Right.
Right. And it's like, is the stock going up or is the stock going down? We want to get in front of it. And that's all they care about. They don't care
Yeah.
about next year's growth forecast. They don't give a
Nope.
shit about that.
Yeah.
So very, very interesting stuff.
Yeah. Fascinating stuff. All right. We're going to continue on the theme of space here.
Mm-hmm.
We'll see if we also say lasers in this story.
Lasers. Yeah, I don't know if there's
Lasers.
lasers yet. Lasers very important in space, apparently, because space is
Yeah.
so vast.
I don't know how we can explain a space story without saying lasers, but we'll find a way to make it happen. All right.
Yeah.
So the title of this article that we're looking at right now. So NASA's Ingenuity Mars helicopter gets set for historic first flight on another world. So Kyle, when are you going to put in your application to be a helicopter pilot on Mars?
Well, probably not with this one, because the big challenge with this was the fact that it's autonomous, right? Because it takes
Right.
about 12 minutes to get a signal from here to Mars, which is still pretty quick, right? Mars, not close, but also close enough that and under the time it takes me to microwave lasagna, I can send a radio, a transmission to Mars. But no, this is really interesting, right? Because this is going to be the first powered flight of another vehicle on another world. It looks like, if you haven't seen a picture of it, it looks kind of like, it's not quite like one of those quadcopters that DJI makes. Instead, it's two rotor blades, right, and they're counter rotating, so it offsets the torque from each other. But I mean, this is going to be really cool, right? This thing is 4 pounds, right? 4 pound helicopter, $185 million, and it'll rise about 10 feet above the surface and hover, so no higher than a regulation basketball hoop. And the whole flight should be over within 90 seconds. So that's what you're getting your money's worth for $85 million. But they're going to do 5, right? Because it's electric, and it'll then recharge. But I cannot wait for the pictures. But it's autonomous, right? And so I mean, this is just really cool that it's going to be able to come up. It's going to be able to do this. The air in Mars is less than 1% as dense as the air of Earth on Earth, right? So that means that however they design the aerodynamics around this thing, when I've looked at the blades, they're huge, right? Because they have to bite into so much less air. But I'm going to be really excited for this, right? Because this thing is going to come up. It's going to like do its little thing, look around, and then come back down. And this is the future, right? When we think about
Yeah.
exploring space, we're going to be sending out, probes and drones like we do now. And it's just an example of how fast technology has changed. This wouldn't have been possible 10 years ago or 15 years ago, in order to have this. But now you have all these autonomous drones out here, and we have the technology to do it. And so I'm sure you'll see more of this, because clearly NASA wants to use this as a test bed for future stuff, right?
Right.
Yeah, and I mean, it's just amazing. Like, we sent an aircraft, like we literally sent an aircraft to another planet. Oh, and one other great factoid about this is it has a very small piece, from what I understand, of the Wright brothers flyer in it.
Seriously?
I am,
Oh,
yeah,
that's super cool.
a very small piece of fabric. So like, those guys obviously dead for a very long time. But
Yeah,
imagine if you told them one day this glider is going to fly on another planet.
that's
It's so
super cool.
it's
Yeah.
so cool. You know, like it's amazing, man. And it's I don't know. We live in an age of wonder. It's unbelievable. So
All right, next step, we're making the autonomous helicopters with lasers on them so they can kill the Martians.
that's right. Mars attacks.
Damn right. All right. We're going to get out of the space theme a little bit and head to a topic that maybe at first glance sounds a lot more boring, but I think there's some good things for us to dig into.
Yeah.
So,
Yeah, no, go ahead. Sorry.
yeah, I'm just going to say what the topic is. So what we're looking at right now, U.S. Treasury yields rise after a strong jobs report. So this past week, the most recent jobs report came out, huge gains in employment. Everyone's pretty stoked about it. It's overall feeling like the U.S. economy is like on a good upswing and a good position. You know, people are getting vaccinated. Everyone's pretty feeling optimistic at the moment. You were going to say something,
Yeah.
Kyle?
Yeah, I mean that last jobs report just crushed it, right? And
Right.
it shows that the hastening pace of vaccinations and the correlated things opening up more is good. So go get your vaccine and help contribute to the economy reopening. Um, so what when Mark and I kind of like originally started this show, and I think we've kind of not done a great job of it, is we were gonna like go over some like economic indicators, things you should like know or should pay attention to, right? Because these things have trends, right?
Right.
Something goes up, something goes down, a number of changes, right? U.S. Treasury yields an interesting barometer, an important barometer for the U.S. economy, right? So when you hear financial news, you'll hear something like, "Hey, U.S. Treasury yields rose, or they or they fell, or prices rose or they fell," and you can be like, "I don't know what the hell that means," right?
Right.
But everybody they're talking about it, so it must be important. So here's a way to view this, right? Um, when the government when Treasury is a bond, right? It's a bond that the federal government says, and basically it's an IOU saying, hey, give us money, right? And in exchange for that money, we're going to give you a series of interest payments called the coupon. And there'll be a maturity date. Maybe it's like a 10-year bond, maybe it's a 20-year bond, maybe it's a 30-year bond. U.S. Treasury, the U.S. 10-year is really important because it's related to all sorts of it's connected in many different ways to the headline interest rates, which is I remember who I'm talking. It's related to the interest rates that you as a consumer would interact
Right.
with, right?
Right.
So so it's important stuff, right? And so like say the government really issues it, and they do it all the time. Say, hey, here's a 10-year Treasury bond that we're going to release, 3 years ago, right? And it's going to pay 3% over the course of 10 years. So once they've released that bond, it is now traded on the open market. And when it's traded on the open market, um, you can then tell this then plays into, hey, do yields rise or fall? And so yield and price are inversely related, and here's why, right? So the U.S. debt is considered the safest investment in the entire world, right? And
Right.
it's considered, if you take any finance classes, you understand anything about finance, it's would be considered what's called the risk-free rate. So if you were trying to like do a discounted cash flow or try to set, do a valuation, right? You always have to subtract, hey, what is, this return from the US risk-free rate, because it has to deal with opportunity costs.
Right.
And opportunity cost is basically like, hey, like what is like 7% minus 3, expect like a 4% return because we know we get a 3% return
Right.
from a treasury. Were
So
you about to say
like
something?
just to kind of just pause for everyone real quick, just to like rehash too. So it's like basically if I'm a firm and I have, $500,000 to invest, like as I'm looking at a, potential new project, building a new facility, building a new product or whatever it may be, and I'm trying to figure out like, what's going to be my return on investment here. I'm counting that against what Kyle's talking about with the risk-free rate. Because I know I could just take that 500K, maybe I put it in this project, or I know I can just put it into essentially what is considered guaranteed money of putting it in the U.S. Treasury yields. And typically the 10-year bond is what's kind of like the rule of thumb for most places on that. And so as long as I'm like, beating that, and then typically also what's called the hurdle rate. So the companies internal rate that they want to get from a project or an investment or whatever it is. So like that's why the 10-year yield is really like what people look at. Sorry, Kyle, I just want to kind of jump in there and like smooth it
Yeah,
out
no,
for
no,
everyone.
no.
Yeah.
That's the. I was kind of resorting to my finance professor, which is great, right? Because I understand it, but not everybody will understand it. So now this bond is being traded on the open market, right? Like say 3 years down the road, and so because U.S. bonds are risk free, essentially, right? There's all sorts of fundamentals behind them. The U.S. economy, the U.S. government's never defaulted on its debt, et cetera. When you hear, hey, Treasury yields are falling, right? That usually means the price of those Treasury bonds are increasing, right? And when you hear that's increasing, what it means is people are saying, hey, I want access to this to this asset, right? To this bond. I want access to the cash flows. It's a safe place to park my money. I know I'm going to get a percentage of return on it. And so the prices will get bid up, right? Because there's only so many bonds out there, and so you're buying these bonds, with whatever coupon they have. And just like anything, right? There's only so many of them. They're scarce. So what that entails is that the price will get bid up. And as the price gets bid up, which usually means people are piling back into treasuries because there's something going out in the economic world where they don't want exposure to that risk. They want to have their money in a safer asset. As that price goes up, the yield is falling down because if you're paying more for a bond, right? Then you're going to get less yield out of it, such as, hey, if I have to pay 20% above what this bond was trading at a few months ago, that's going to take a cut out of whatever the yield is or the coupon that it's delivering on an interest payment. And so when you hear that yields are rising, right, that means people are selling. They're selling treasuries and they're going back into assets with more risk or where there's more opportunity for returns, which could be equities, right? For example, hey, we're piling back into the stock market now, or some sector of the stock market because we think we think there's growth there, and that ties back into this jobs report where you got a really strong jobs report. So people are thinking, okay, now is the time to really jump back into stock, which is crazy, right? Because the stock market is already superheated now anyway. And so everybody are leaving treasuries, right? Which means they're selling them. As they're selling them, the price is going to get bid lower because there's more people trying to sell than there are buyers. So you got to make it make it worthwhile for a buyer, and then that means the yields are going to go back up because the price could even go below what the initial price that the bond was offered at. It could do that, right? And then you have these yields, jump up in a major way. And there's also too, like people are trying to gauge it on, hey, this was issued 3 years ago, what is already some of the interest payments have been sent out, right? So that you have to that has to be factored into price as well because you're only going to get 7 years interest payments back. But that's just a simple way to do it. So sum it up: yields go up, people are leaving treasuries. Yields go down, means prices are going up, people are going back into treasuries. And we should talk about this more because it is an important barometer of what's going on in the U.S. market.
So y'all, you don't need to go get an MBA or anything. Just listen to this show and you'll learn everything you need to know.
That's right. You just need to know how to value cash flows. If you know how to value cash flows, you're 80% of the way to an MBA. I swear to God.
Yeah.
I try to tell that people and just so. But hey, I didn't know either before I went and I got an education. So
me and my discounted cash flow models had some deep emotional events together.
Yeah, they are. It's an art and a science, right? And out in the real world, the DCFs are not used as commonly as you would think because they are tough to do because they have a lot of assumptions built into them.
Yeah.
It's one reason metrics such as EBITDA is so important, right? And multiples, because instead of doing some intrinsic analysis, you do a comparable analysis on, say, a company and say, hey, this peer set is, of in this industry, they're trading at 10x, right? So it's a very easy way to do valuations because a DCF is a massive pain in the ass to build.
Yeah. All right. We're gonna head out from this story and head into the next one. So the next article that we're looking at is titled "To Spin or Not to Spin: Disposals Create Fortunes and Headaches," and it's all about if I'm a company, and it's kind of using Volkswagen in this example, but it's just kind of because they had a little bit of a April Fool's joke the other day.
Was it an April Fool's joke? I couldn't tell. Like I've been reading and they said it wasn't, but then they said it was.
I'm looking at this one and it says that it was a fake announcement.
It was a fake announcement.
Yeah.
Okay. Well, the Wall Street Journal said it, so I'm going to believe them.
Yeah. And for everyone, so on April Fool's, Volkswagen came out and said they're opening up a new brand called Volkswagen, which is going to be Volts. So like instead of VLKS, VLTS, right? Which is going to be like their like new electric brand or something. And then now they're saying that it was a fake thing. But anyway,
I think they botched the rollout too. Like it came out. It was supposed to come out April 1st. It came out like a day early or something.
Yeah. Anyway, the kind of the point of what we want to talk about here is why or why not a company might want to spin out a certain part of their company into a new company. All right. I know like you worked in M&A before your previous job, so I'm sure this is probably some part of the conversation.
Yeah, so I've worked on spinoffs before,
right,
in my previous role, and they are interesting. And so the reason I selected this article for something else to talk about is because it's an element of corporate strategy that is probably like 1 to 2 levels above what you would get in a basic like finance class or MBA class, right? But it's important stuff, right? And it's design. I think this is a good thing to maybe talk about to kind of get people oriented around what does value unlocking look like out in the civilian world. And so when you think about like strategy, right? Like every veteran says they want to do strategy because they all think they're the next, I don't know, MacArthur.
We all think we're Sun Tzu. Yeah.
Yeah. Everybody thinks they're Sun Tzu or MacArthur or Patton.
Right.
News for you. Most of you are not. I'm not.
No,
I can totally tell you that I've met people and they're brilliant, but it's a spinoffs, right? What is a spinoff? A spinoff at its core is if you have a company, right? Say you have a company and they've started a new product line, for example, or they have a product line that's very differentiated from what they're doing. And you could have like part of a company could not be doing well, but this part could be doing like really, really well. And and investors, are like, hey, we love this company, and but investors saying, hey, we don't particularly like the company you have right now, but we really like this one segment. And so what a company will do is they will do a spinoff, right? And a spinoff is, hey, we're going to take a core part of this or take a portion of our business and essentially spin it off into a new company. My little hand movement here. And that is going to become a completely separate entity from the previous company. It's going to have its own management team. It's going to have its own shareholders. It's going to make its own decisions on its own. And there are a lot of benefits to this, right? And the benefits have to do primarily with, hey, you're no longer tied up in kind of basically the BS of what's going on in the old company. You can make your own investment decisions. You can do your own you can have your own strategy, right? So like think about it, right? Like if you have an established brand that maybe isn't very speculative or doesn't have a lot of debt, right? Or isn't doing anything very innovative, and you have a portion of it that is being very innovative. And maybe they have to like, they're not having like, they haven't started to make a lot of money yet, but there's the potential for them to make a lot of money. It's a lot of complicated reporting for that company for financial statements. Going to the market and trying to make that argument about like, hey, we know the stock price for this overall company is X, but when you look at what this company should be, it's Y. Like it just it gets things really intermingled, right? And there's like different corporate cultures and all this stuff that has to go into it. And so the idea that you can spin this off is you can basically create way more value. And basically let a company become free of what it's doing. I guess like the military analogy would be, there's special operations, right? And then there's like the conventional military, and special operations came out of the conventional military, but they decided, hey, the cultures and the mission and what they're doing is so different that they have to be a separate entity. They have to have their own culture. They have to have their own kind of like goals and metrics for evaluation. So that would be a good way to look at that. And so what this article is saying is Volkswagen, they kind of flubbed the the Volkswagen, right? Which it's kind of hard to hear the difference between the two.
It is, but yeah.
But people are saying like, hey, no, Volkswagen should spin off their electric vehicle part of their company, right? And it should be an entirely separate entity. and it'll unlock all sorts of value. And it'll be its own brand and something investors can like get behind, kind of like, like with Tesla now. And then the company also goes on to talk about a lot of the pitfalls and that go with this, right? So like when I've worked on spinoffs before, a big portion of it is right. Like you're only going to get the chance to do this once,
Right.
and you got to get it right. And so you've got to come up like, hey, we are disconnecting these two entities, right? When you talk about like IT systems, HR systems, policies, management, there's a lot of other items like, hey, is this company going to carry like some like liabilities or assets from the other company? I know in the previous one I worked on, which I won't name, it was, there was a big concern over pension liabilities, right?
Yeah.
Which
Yeah,
doesn't
I'm
seem like
sure.
the most exciting thing to talk about,
But it's a
but
really
it's
big
like,
deal.
yeah, but it's like,
Yeah.
hey, if you worked in this part of a company, right? And say, under a division and the company, and this is part of the company that's going to get spun off, right? And that company owes you a pension or, owes you some sort of like retirement, it's a liability on the asset, on the balance sheet, right? Because they have
Right.
to pay that out. And it's like, okay, what if they spin this off? Do the liabilities go with this new company, right? Because it has to service them, or does it stay with the old company, right? Because that's who
Right.
you were working for. So like that's not that's it. That's the kind of like challenges and headaches that say if you go work in consulting or investment banking, is the sort of stuff that you'll face, right? Is helping companies kind of rationalize and come up with these sort of plans. And then you got to go through all the legal documents and create like, hey, an S1, it's going to go public. There's all millions and millions of dollars and millions of man hours go into this sort of stuff. So really interesting, but a way to think about corporate strategy at a high level, right? When you see stuff like this, you hear stuff like this.
Yeah, good pick. I think there's a lot of good lessons to learn from this one. So we're going to go to the last story here. So another big event that happened this week is the Biden administration introduced their infrastructure plan. Okay, so this is, oh man, I'll make sure I get the number right because it's freaking huge. $2.3 trillion infrastructure plan, and wrapped up in this also is a, to pay for it would be a rise in the corporate tax rate. So there's a lot going on in this one. Both from, and I know there's a lot of, as always happens with any type of legislation, there's all kinds like pork that gets added in and special projects and interests. And, every part of this is wrapped up in, Kyle, did you freeze there for a sec? Kyle, you there? You there? Oh, you froze for a sec.
Yeah, I'm back. I don't know what's going on. My internet like froze.
No worry. The Starlink satellites were just crossing over each other. I think that's what happened.
Yeah, exactly. We'll just call it with that.
Yeah. So as I was saying, like wrapped up with this project, I know they really want to push doing, repairing American infrastructure, bridges, removing lead pipes, all kinds of stuff. There's a lot of like green initiatives wrapped up in this project as well. So this is a really big thing. And I know what the end product will look like. I'm sure it's not going to be exactly like what it looks like right now, but this is going to be a huge part of the Biden administration's plan of like what they want to do.
Yeah, so I think for context, right, it's always helpful to be able to compare things on an order of scale that makes sense.
Right.
This infrastructure plan is 2.3 trillion. The US GDP is 21, 22 trillion. Who's counting?
Right.
So it's a really large spending
Huge.
bill that's gotten passed. It's really massive. Probably something that you wouldn't have seen since World War II. The main argument here, if you want to try and boil down this, if you want to try and boil down why this is important, it's because the Biden administration wants to raise taxes on corporations, right? And in order to help finance this, and they want to take like the tax rate from like 21% to 28. So when they, corporations and the taxes they pay has always been a hot topic for people, right? And people are like, oh, corporations need to pay their fair share, the corporate tax rate, et cetera, et cetera. Some corporations don't pay anything in corporate taxes, right? And for somebody like me, right, it really frustrates me because I think it's important to try and understand why we pay taxes here. Hold on, I gotta let my dog out of my room before he drives me crazy. Okay, thanks. So people will say, we want corporations to pay more, right, in order to fund stuff, right? And they're already not paying their fair share, and they take that money and they give it back to, investors or the management through share buybacks. And it's almost like, hey, that money is essentially like, I don't know, somehow taken out of the US economy,
Right.
and is like value destroying, which is not true at all. Corporations, depending on who you ask, right? My personal view is that corporate taxation is double taxation, and it's double taxation because the money that corporations make its way back to individuals, either like through shareholders, right, for corporate buybacks or a shareholder buyback, or to its employees, right, or to the vendors that they service if they do reinvestment, and do some sort of capital expenditure, and that money then eventually gets taxed at the individual level. So the US government is still getting its money, right? So the idea is that corporations are going to be somehow they're getting off scot-free. It's like, no, corporations are just a means for organizing work and then redistributing the gains and losses from that. And then you'll also hear people say, hey, corporations paid 0% in income tax in federal income tax last year. This is a sure sign that we need to raise the corporate tax rate, right? Well, when you hear that, right, let's maybe like boil that down to what it means. When a corporation pays 0 income tax rate, it could be for a variety of reasons, but probably one of the biggest is they carried over losses from a previous year. You're right. If you don't make any money, you don't pay any taxes, right? That's the surest. I took a corporate tax class. It was actually tax evasion class in in my MBA program. The professor was like, I want everybody to know, do not do anything illegal with this information. It was really interesting, right? But the fundamental rule was, if you don't make money, you don't pay taxes on it, right? And so there's all sorts of stuff that occurs at a high level. You can, carry over losses, right? Like say you take like $1 billion loss or something, and you can carry that over like X number of years. If you get debt, right, you can you use the interest rate or the interest that you pay on that debt as a tax shield, right? You do that right now.
Yeah.
Individuals do it when you take out a mortgage, right? The interest you pay in the mortgage is tax deductible. It's the same thing with corporations. It's just on a much larger scale. It's on the billions, right? And so the idea here is that if you raise corporate tax rates, it leads to non-productive uses of money. So say it goes from 21% to 28%. Here's what's going to happen. Corporations are going to then start to engage in financial arbitrage that isn't involved in actually doing capital expenditure or finding a way to return money to shareholders or pay their employees more. They will instead go load up on debt, right? Or do some sort of, if they go say, hey, we're going to go load up on even more debt, right? And we're going to just basically use we'll load up on the correct amount of debt than the calculations that we've done to keep our effective tax rate, what we're actually paying at some level that makes sense for us. And they'll use the interest, the interest payments they're making on the debt, even if they're making a ton of money, right? Especially if they're making a ton of money. Why would Apple, which has more money, which is more solvent than the U.S. government, why would they need debt? They can just pay for it. They have a huge war chest. Well, the reason is they're trying to reduce their tax rate, right?
Right.
And so they'll get all this debt, and they'll just load up in it, and they'll do that, right? That is a non-productive use of money. That doesn't do anything for anybody, right? Besides make a bunch of investment bankers rich, who are actually the ones who are brokering the transactions. And so that's the general argument that if you were a Republican, right, you would make against this. You're saying like you're not going to do anything. You're just going to cause financial arbitrage, and then people say, well, they're not paying their fair share, and yada yada yada. So I mean, this is what when you hear this, because this is going to get turned to a giant shit show down the road. This is the argument you're going to hear come back and forth, but it'll be in more simplistic terms than what I just put.
Right. Because then the argument to that is like, well, Flint, Michigan sucks. Yeah. Other places, terrible infrastructure. We got to do something about it. There's all these fat cats on Wall Street. We can just raise taxes on them and they pay more. And that's like the simplified bullet down version of what that counter argument will be.
But the fact is, like, if you raise tax rates, you cause more financial arbitrage to be done, and you actually make Wall Street people richer, because they're the ones who are engineering all this financial chicanery, right? So like, I want people to think about this, like take off your blinders, take off your assumptions, right? And really try to dig into it, which is tough because this stuff is kind of boring and dry and
Yeah.
not that much,
Yeah.
fun to talk about.
And it's also, I think it's also important to kind of separate like the two things that are going on in this bill. So there's like the rising tax rates issue, which I think you did an excellent job of kind of covering like the reality of how that sets in. But then there's also the reality of the United States has some really failing infrastructure across our country, and like that needs to be fixed.
Yep.
So it's like, how do we do that in a sustainable manner that like actually, can be paid for in a way? Like the money's got to come from somewhere. And there's like kind of two competing issues going on of like how we, this is why we have legislators who, quote unquote, figure the shit out somehow. But the reality is that like the United States does need a infrastructure redevelopment plan because we have some failing stuff around the country.
It does. When I lived in Chicago, I couldn't believe how disastrous some of the infrastructure was.
Yeah.
Not for the L. The L was well run, which was
Right.
a big difference between that and the subway system in New York City. But we do need it, right? And you go to places like China, they got like bullet trains that'll take you from X to Y.
Yeah.
And, it's just, you're like, what is going on? Like the U.S. But this is the difference between the two countries, right? Like the U.S. as a system, we have prioritized air travel, which is why we have a huge airline industry instead of rail travel. Of course, I don't know. U.S. is also a much different country than China, obviously. Right. And so if the Biden administration is able, like their kind of, I think, general idea with this is they know this isn't going to actually get past Congress. Like they know. So they've set like it won't be 2.3 trillion. It'll be like much smaller.
Yeah.
So they've set the goals so lofty, right, that they know Republicans are immediately going to be like, hell no, we're never doing this. And what they will end up settling for is the two moderate senators, Kristen Sinema and Joe Manchin. So Kristen Sinema from Arizona and Joe Manchin from West Virginia, two swing states that are very important, will be able to basically talk them down and claim victory of some sort, saying, hey, we got this down to something that was bipartisan, right? Which right. I don't know. Maybe that's how the system is supposed to work, So, but this you're gonna hear a lot about this in the next coming weeks, and it's gonna be exhausting.
Yeah, for sure.
Like
for sure.
Is.
All right, everyone. That wraps up the show for the week. So before we close out, just a friendly reminder that if you're listening to us and you enjoy the show, you kindly leave us a review. It helps the show get found on whatever podcast apps people are using, and it also helps other vets find the show. So we appreciate the people who are leaving a review. Thank you for that. Kyle, you got any last words before you want to close out this week?
No, I was thinking maybe I should, but I don't have anything. I hope everybody has a great Easter.
Yeah, have a great Easter, y'all. You'll be hearing this on Monday morning, so I hope you all had a good time yesterday with friends and family and everything. And we'll see you all next week. Stay safe. Yep.